Hello, this is Trading with Confidence, and I'm John Breland. Today I'm going to talk about entries and exits into your trades and how I do it and some recommendations in order to get good fills. And so let's get started. Okay, so today we're going to talk about how to take entries. And this comes from a mistake that I made recently of taking a trade. And I want to discuss that first and show you what I should have done. So there's a lot to this video, and so just try to follow me as close as you can. I think I'm going to first tell you the trade that I took. And so the last I took a trade was down in this area when I got out of my trade here. And so it's been a while since I've taken a trade. And the reason for that was because I was learning about how to make YouTube videos. And so I spent a lot of time, putting together this channel and learning about all the hardware and all the software I needed to do this right. So by the time I was ready to take a trade again, we were up here. And I saw this back divergence, and if you're familiar with my signals, you'll know that that this is a back divergent signal on the surge. And so I saw this moving down, I saw this back divergence and this thing turning around here. So I expected to see another move down. And I didn't know exactly how far it was going to move down, but at this point, right here, I felt it was quite imminent that a turnaround was going to happen. And that's because the surge had moved down at about an equal amount of time. And I figured, okay, the stochastic was low. So somewhere around here would be a good time to take a trade. And so I put in my orders to get in on the 786 level. From the top here to the bottom there, the 786 level is down here. So I put my order here to take my trades. And I put a lot of orders in for various altcoins, because this is total 3, and total 3 is like all the altcoins put together. And since the market is very synergistic right now, I figured that was this was a good time, and for many altcoins. And so I went to each one of my altcoins, and I put in my limits to buy right down in here. And I expected the market to go somewhere up here or somewhere up here possibly. So the next day, I went to visit a friend and figured that it was going to hit at some point. But when I got home, I saw the market. I saw a big green candle. This was the open, and here was this green candle. It was a green candle at that time. So I thought it was actually right around here, right about halfway up this stick right here. And so I thought, wow, it didn't quite hit the 768. It could be taken off from here, I believe, in a long. So I just skipped my 786, and I went ahead and I purchased up here. And so that was my error. My error was I didn't wait for the candle to fully materialize, and so that was kind of a mistake that I made. So obviously, right, by looking back, looking in history. So I want to talk a little bit about what was the right thing to do. And of course, I've done this before, but since I hadn't taken a trade for a long time, I just got a little bit too eager to get in, a little bit too excited. And so this day was a day when Ukraine got invaded. But the right way, so these kind of things don't happen all the time, obviously. So the right way to take this trade was for me to have kept my 786 level buy down here. Okay, and then I would have got in, and it would have mostly have gone my way. There would have been, there would have been a day where it went against me, then I was in positive. And a day where I was totally positive, and then one day where I was in, so it was basically 2 days of suffering through this trade, having a negative balance, negative result before it actually started to go. And here it hit 786 as well. But anyway, so this colorful rainbow thing here is a Fibonacci tool, and the tool is very useful when it comes, or I should say, the way I use it is very useful for taking entries. And basically, these levels they're calculations, I guess, that appear in nature. For example, a conch shell will have some kind of spiral nature that fits into these specific numbers in some way. Spiral galaxies are the spirals themselves are a function of these numbers. Apparently, the golden mean of a picture, the width and the height of a picture frame. There's one particular width and height that looks exactly right, and it happens to be where the width is 0.618, which is this number here, times the height, which is, when you have that ratio, the picture looks just perfectly proportioned. So I mean, these are numbers that appear in nature, and they also appear in the markets as well. But one that particularly is important, in my opinion, is this 786 level. And I use it to get into my trades because it helps me to get the best fills, all else considered. It doesn't, sometimes, like in this case, we had this very extraordinary event and the market moved lower than 786. But the 786 level is typically a very good level to be getting in on your trades. So there's one thing I want to say about what has turned my trades around. And it took me a long time to learn this. But the best way to take a trade is to buy on red candles and to sell on green. And that's very hard to do because we all want to get in on that big run. And when we see a candle move up, we automatically think, oh, okay, it's moving up, it's going to start this new run. It's pointing in that direction. I would say that in more cases than not, it's more like a rubber band, where if a bunch of buyers come in, you've got a glut of sellers that want to take it back down. So if you look in a lot of these cases, here we had a bunch of buyers and it went back down. Here we had a bunch of buyers and it went back down. A bunch of buyers went back down. Buyers went back down. And so the odds are, in reality, that if you have, if you see a green candle, the next candle is probably going to be red. I mean, you see, and of course you have these rare situations. Well, especially like if you're in a bullish market, if the market is trending bullish, the chances of these consecutive green candles is much higher. If the market is trending bearish, the chances of these consecutive red candles also much higher. But in a lot of cases, and I would recommend that at some point, if you want to see what the chances are that you're going to get a run like this, I would say it's probably around 15%. Especially when it comes to turning around, when it comes to the market turning around, because in order for a market to turn around, it's got to move up and down before it actually takes the next move. So, I mean, this is the perfect case. You know, when we reached the bottom here, it moved up and down for almost a week or more than a week. So this gives you opportunities. If you have a system like mine, where you're playing these low levels, these high levels here, this gives you an opportunity to get into a much better position. So back to my trade. So I got in this trade without thinking I should let the candle close. And I moved, of course, all my 786 buys up here. And then so I suffered through all this. But if you notice, I haven't said anything about a stop. So a lot of people will put a stop below the low of the market. Like in this case, the market moved all the way down here. So I could have had a stop like right down like below this area right here. But there's a problem with stops. So I traded stops for a long time, and I kept losing and losing and losing. And I learned that stops are really for people who don't trust or don't really know what they're doing, really. And I mean, that's a very controversial statement, of course. But this system tells you what the market is doing. And if you know how to read it properly, you start to realize that you don't need stops anymore. When I got into this trade, if I would have put in a stop, I would have gotten out right down in here and I would have lost money. Instead, what I did, and the way this system works, is that you buy on buy signals and you sell on sell signals. So when we were right here and the market moved up like this, what did I see? Well, I saw a front divergence trend continuance signal right here. And when I was on the 8, I saw a pattern pattern 2, which was a sell. I was right here. I saw that and I said it was coming down a little bit, and I got out of my trade. So yes, the market is eventually going up here, but getting out of this trade right here was not a bad place. To get out. It was at the top of this particular little trend right here. So I ended up scratching on this trade. Some of my positions I was in a profit. Some of my positions I was in a little bit of a loss, and ended up pretty much scratching and saving my account. So in not all cases do you make money. In some cases you lose the least. And that's what happened in my case here. I unfortunately got in too early, and I didn't get stopped out because I knew I didn't need a stopper with this profile. I waited for my next sell signal. It came right here, and I sold right here and saved my account. So I mean that this is how I trade this system. I buy the buy signals and I sell the sell signals. Now here's another case right here. I'll show you another case. Here is a buy signal. Right down in here, this area. Well, it immediately turned around and there was another buy signal here. This was a pattern. This was a pattern 3 buy signal right down in here. So buy here, no sell, and a buy here, and finally a sell appeared which was a pattern 1 sell. Right here. I should say right in here, this area here. So it was buy here, take a loss, buy again, and then this one scratched, and then this one made money. So you end up making money this way. So if you put all your funds into a trade, then you're out of luck here because you couldn't get into this one right down here. But if you if you put in like maybe a third, then another third down here, then you would have been able to make a profit of this trade. So that's how this system works, or at least how I like to trade the system. There are probably many ways to trade it, but I don't use stops, and I just basically buy when I see a buy signal and sell when I see a sell signal. Again, in this case, I bought incorrectly here, but I sold here, and the trade was a wash. So I want to talk a little bit now. This video is getting a little bit long, but I want to talk a little bit now about how to take an entry. So the first thing I could have done was just held this here. I could have just held this as my entry point, and that would have given me a profitable trade. If one other way you can do it is by adjusting this in real time as the market moves. So what you could do is, when you see a trade set up, like right here. Okay, let's say you're right here, and you wait for the market to close on a green candle if you're going to buy. Okay. Now the values that are shown here are the values at the close of the candle. Once the candle closes, this is fixed. It's not going to move around any longer. But as the market is moving, these are going to move up and down. So like in this case, when this was green, because it opened here, when this was green, this blue line had crossed the red. But when the candle closed, the blue line closed just right on the red, or probably a little bit below the red. If we blow this up here, it closed right on the red. It didn't really cross it yet. So that means that it hadn't fully crossed. There could have been more down to go, right? But then we had this green candle here. Now the green candle closed here, and so we have a high and we have a low. So then what you can do is you can put in your Fibonacci between the high and the low of that candle. And now we want to get the best fill we can get, right? So you can put your buys like right down in here at this level, right there, which is actually a better level than the previous day's level. And then wait for it to get hit. Well, you had the next day come along and it didn't get hit. You could have at some point thought, oh wow, I really missed it because it moved way up here. But remember, these areas are very volatile. They swing up and down. There's a lot of movement in the market as the market turns around. So the next day comes along, and then you put your Fibonacci between the high and the low again, and then you replace your orders. So then now you're at this day, at the end of the day, you place your orders here. The market moves up, moves down, your orders get filled. So you get filled to this area right here, which from if you look back at it, you know, that's a pretty darn good area to be getting in on this trade, right down in here. There's not a whole lot. There was this big wick here, but there's not a whole lot of activity down here. It's a pretty safe area. So the same holds true with these trades up here. So let's take this trade up here. So I saw this move down, and then so we see this red candle appear, right? We got our first red candle after a signal. Now this didn't cross here, but we did get a red candle, and so we want to try to get in. This was very mature, by the way. This was a very mature signal on the surge, and you know the stochastic is high here. Okay, so let's do our little exercise. Let's put between the high and the low of the latest, and let's see if we get filled. Well, it went to the 618 level. Let's try the next day. Move it down. It went to the 0.382 level. Okay, so it didn't quite work in that case. So then it makes you think, okay, well, first of all, we have to consider the fact that I'm going to put in a moving average here. Make this a 50 period. Okay, 50 period moving average. So we're trading under the 50 period moving average. If we're trading long under the 50 period moving average, we're generally trading an overall downtrend, but we're trying to catch a new uptrend. It's going to be more volatile in that case. However, if you're trading with the trend on the way down, that is an entirely different story, right? So then you can make a rule where you say, okay, when I'm trading with the trend, I'll use the 50% retracement. When I'm trading against the trend or against the moving average, I'll use a 0.786 retracement. It's because, you know, traders know that when they see this, they have a tendency to short or to sell their positions when they see a moving average that's going down. So it's likely you're going to get deeper levels to trade with, basically. So that's how I take my trades. Obviously, I didn't do it the way I should have done it for this past trade, but I think those are the kinds of rules you could use. And I definitely want to say that you know, again, you want to try to understand which direction you should be trading, and then you need to try to buy red candles and sell green candles. That has really turned around my trading significantly. So that was a long video. So if you're still watching, thank you very much. Appreciate it. It really means that you're dedicated to your trading. And even though I made the mistake of this particular trade, at least I saved my account by following my other rules. But certainly in the past, I've bought many red candles and sold many green. So I am you know, every trader really has to work on sticking to their own rules, and that includes myself. So again, thank you very much for watching, and if you got something out of this video, please like and subscribe. I will be posting more of my trades as we go along. Thank you very much. See you next time.